Hello, sir. My name is Rani and my ID is 151155455. And my presentation topic is asset. What is an asset? An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that will provide future benefit. An asset are reported on a company balance sheet and they are stored and created to increase the value of a firm and benefit the firms of operations. Thank you all.
Hello everyone, I'm Tanvir ahmed. My ID is 151155336. Today I'm going to describe about liability. At first we have to know that what is liability. A liability is a company's financial debit or obligation that arise during the course of its business operation. Liabilities are settled over time so the transfer of economic benefits include money, goods or services. Recorded on the right side of balance sheet, liabilities include loans, accounts payable, mortgages and accrued expense. Liabilities are a vital aspects of company because are used to financial they are used to finance operations and pay for large expansions. They can also make transaction between business more efficient. For example, in most cases, in a wine supply sales a case of wine to a restaurant, it does not demand payment when it is delivered the goods. Thank you, everyone.
Hello everyone, this is Nadim Hossain Shaon and ID is 151155407. So my topic is owner's equity. So first of all, owner's equity along with liabilities can be thought of as a source of the company's assets. Owner's equity is sometimes referred to as the book value of the company because owner's equity is equal to the reported assets amounts minus the reported liabilities amounts. Owner's equity may also be referred to as the residual of assets minus liabilities. This reference makes sense if you think of the basic accounting equations. So assets equal to liabilities plus owner's equity, and just rearrange the terms. Owner's equity equals to asset minus liabilities. So owner's equity are the words used on the balance sheet when the company is sole priority sheet. If the company is a corporation, the words stockholders equity are used instead of owner's equity. An example of an owner's equity where Mary Smith is owners of the sole proprietorship. Examples of the stockholders equity accounts include common stock, preferred stock, paid in capital in exchange, paid in capital from retained earnings, and accumulated other income. And thank you, everyone.
Hello everyone, I'm ahmed and my ID is 151155066. So today I'm gonna talk about general journal and we are gonna solve a math regarding general journal. General journal is a part of accounting, which is a record keeping system. When an event occurs, that must be recorded, and it's called a transaction. And the transactions are stored in the journal and then calculated and manipulated to generate results like ledgers or trial balance. Let's examine the questions and create a journal. Bayern invest taka 10,000 cash in an advertising company, which is called Pioneer Limited. So in the journal, we have cash entered as debit and owner's capital entered as credit, which and the amount is 10,000. Then Pioneer purchases office equipment costing taka 5,000 by signing a 3 months to a 12% note payable. So Pioneer Limited purchases some equipments with note payable. So the equipments will be listed in debit and the note payable is credit and the amount is 5,000. In October 2, Pioneer received a Taka 1200 cash in advance from Rock, a client for advertising services that were expected to be completed by December 31. So this is an unearned revenue. So the here cash will be in debit and unearned service revenue is credit and the amount is 1200. On October 3, Pioneer pays office rent for October in cash taka 900. So this is an expense. It will be entered in the journal as rent expense. Rent expense as debit and cash as credit, and the amount is 900 taka. Now in October 4, Pioneer pays taka 600 for a 1-year insurance policy that will expire next year on September 30. So this is an prepaid insurance, and it will be enlisted in the journal as a debit, and cash will be enlisted as credit, and the balance is 600 taka. This is all my part. Thank you.
Hello everyone, my name is Tanvir Parvez and my ID is 151155415. Now I'm presenting journal October 5 Pioneer purchase and estimate 3 months supply of advertising materials on account from supply for taka 25,000. So supplies are debit and accounts payable are credit because purchased supplies on account from your arrow supplies. October 9, Pioneer hires 4 employees to begin work on October 15. Each employee is to receive a weekly salary of taka 500 for a 5-day week, payable every 2 weeks. First payable made on October 26. So the October 9 has no entry. October 20, buyer withdraw taka 500 cash for personal week. So owners are drawing debit and the cash are credit. October 26, Pioneer owes employees salaries of taka 4,000 and pays them in cash. Salary and wages expense are debit and the cash are credit because they paid salaries to date. October 31, Pioneer received taka 10,000 in cash from Coupa company for advertising service performed in October. So the cash are debit and the service revenue are credit. This because of received cash for service performed. That's all.
Hello everyone, I am Jane Tasnim Nisha and my ID is 151155414. As my part is ledger, at first we all have to know what is ledger. A general ledger account is an account or record used to sort and store balance sheet and income statement transactions. Examples of general ledger accounts include the asset accounts such as cash, accounts receivable, inventory, investments, land and equipment. Okay, then we'll go to the math. In the journal part, we first have to know where the cash occurs. At first, we can see in the first transaction there is cash, and we'll take the opponent accounts title of this. Here we will take owner's capital, and as it is in debit, it will count in the debit part. Second, we will search again where is cash, and then we can see in October 2 there is cash, and the opposite account title is unearned service revenue. Then we will take the unearned service revenue in the credit part, and the balance will be in this part. Next, we'll check again, and then we'll get in October 3, and the opposite account title is rent expense, and we will take it in the credit part. Next, again, it will occur in October 4, and we'll take the opposite account title, what is prepaid insurance, and this will go to the credit part. Next, again, it is in October 20, and the opposite account title is owner's drawings, and we'll take it in the credit part, and the balance will be balanced in this way. And the next is October 26, where the opposite account title is salaries and wages, and we will take it in the cash part. And last one is October 31, and the opposite account title is service revenue, and we will take it in the debit part. And that's all. That's all about my part. And I'd like to call the next member of my group. Thank you.
Hello, I am Razwana, ID 151155306. Continuing the general ledger part. First, found the next economic transaction after supply is a economic transaction from which we get benefit less than 1 year. So it's a asset, and it's as supply is a asset, so its default balance is debit. When we entry supplies in a ledger, in accounts title, we will add the opposite account title. Here, supplies opposite account title is accounts payable, and which value is 2500, and its default balance is debit. We will do all the lasers in the same way. Just one thing we have to remember, that assets, expense, and drawings, all these three things have a default balance debit, and revenue, capital, and liabilities have default balance credit. That's all my part. Thank you.
Hello viewers, I am Afrin, bearing ID 151155474. Now I'm gonna talk about trial balance. So we have to know what is trial balance. Trial balance is a list of closing balances of ledger accounts on a certain date and is the first step towards the preparation of financial statements. It is usually prepared at the end of the account period to assist in the drafting of financial statements. Ledger balances are segregated into debit balances and credit balances. Asset and expense accounts appear on the debit side of the trial balance, whereas liabilities, capital, and income accounts appear on the credit side. If all accounting entries are recorded correctly and all the ledger balances accurately extracted, the total of all debit balances appearing in the trial balance must equal to the sum of all credit balances. For preparing a trial balance, here I prepare a trial balance for Pioneer Advertising Limited. First of all, we have to write the name of the company, then a trial balance, and the date of ending the account period. Then from all the general ledgers, we have to put down the account titles on account title section, and the normal balance as debit or credit. After all this balance putting on the trial balance, we have to summarize this balance, and if these are equal, the trial balance is correct. Thank you all.